Inflation might come down to, let's say, 4 to 5%, and it's coming down due to this hiking of over the last 8 9 months. But again, I mean, we are in front of a potential World War III, and war has always been very supportive for rising energy prices and commodity prices. And so I don't think that inflation will come back down to those 2% that we experienced until 2021.
Since the financial crisis, the Federal Reserve has been expanding its balance sheet by buying trillions of dollars of government bonds. This has had a massive effect on the global economy, and we are now seeing the consequences. Large companies are being forced to let go of employees, and more dire consequences are expected in the summer. It appears that there is no way out of this cycle of quantitative easing, balance sheet expansion, and money printing that has been occurring over the last 15 years. We will now introduce to you Florian Grummes, who is an independent financial analyst, advisor, consultant, trader, and investor, as well as an international speaker with more than 20 years of experience in financial markets. He is specialized in precious metals, cryptocurrencies, and technical analysis. In this video, Florian will be analyzing the global market and touching down on inflation, the crack-up boom, and why he thinks we are on the verge of a world war. It is an interesting take coming from him, and we know you would be excited to hear this. So grab something and sit down and watch this video, and also while watching, make sure to hit that like button, subscribe, and drop all comments below. Enjoy.
You can see that your dollars don't buy the same amount of goods and services like they used to just a few years ago, right? I mean, food prices have been skyrocketing. Rents have been going through the roof. Everything has become much more expensive. Only your salary has usually not basically went up in the same matter, and that's exactly what's happening. So you basically might still receive in nominal terms the pension that has been promised to you, but you might not be able to buy a lot of stuff with it in a few years. So that's the devaluation of the paper money, and it's been always the problem for not only decades but centuries, and that's why mankind always returned back to gold. And I believe it's not different this time around. One of the main drivers, obviously, is the loss of confidence in the currency, right? And we see this again. It's a process. It's not happening from one day to another. But more and more people are waking up, losing the confidence in the dollar. It's not only the dollar; it's also the euro and all these other paper currencies. And they're all trying to diversify into hard assets that can be real estate, that can be stocks, and obviously precious metals and commodity-related investments, and also to a certain extent Bitcoin and maybe some of the other cryptocurrencies. And that's the main driver. I mean, now, as you can see, inflation is a vicious circle, because once you realize that prices are going up, you also tend to increase the prices for your own services and goods. And you usually tend to buy everything now instead of waiting, because you expect in a year from now getting less for your paper money. And that's one of the psychological drivers behind inflation. And I think that's also one of the reasons why it will be sticky and not really going away over the next few years. And at the same time, in the big picture, we have China owning large parts, basically, of the planet nowadays, with partnering, especially in Africa, where there's a lot of resources and commodities, and Russia as well, one of the big commodity players, and those two countries can easily decide to not give any more resources to the Western world. Now we are in a war situation, and at the same time, the move towards green energy, this will take a lot more copper, a lot more other commodities, and there's simply not enough around. So it might be a supply-driven inflation here in commodity prices as well. Of course, I haven't talked about energy. I mean, oil, of course, in a war scenario will also go through the roof. This is all very inflationary, all basically supporting that loss of confidence. And at the same time, we have huge debt levels. The debt ceiling discussion in America is not going away. It's coming up again every year. And now the fight about it is even stronger and more intense than ever before. This all leads to a cracker boom, where you can see that basically central banks have to print more and more money just to keep the system running. At the same time, the loss of confidence in that paper system and that means rising prices, and then everything can go still much higher. I mean, you've seen stock markets explode in the hyperinflationary situations in other countries. So that's basically the cracker boom.
All around the world, people are sounding the alarm about the potential for war in Europe. There are many reasons for this, but at its root is the fact that warmongers have had a loud voice in this situation and must be countered with peace negotiations. Unfortunately, history has shown us that countries have historically been used to further entrench a conflict. War can quickly escalate into false flag events, with powerful countries using it as an excuse to expand their territorial holdings or gain more power. Florian Grummes continued by saying that more efforts have been made to continue the war, which is already well over a year now, with the West funding the war and sending supplies to the war front, instead of arrangements for diplomacy and negotiations to be made a priority. He also talks about the disinflationary consequences of the present market outlook.
There is a war going on in the Ukraine for a year already.
Yeah.
Western countries sending in more and more tanks, weapons. Now Ukraine even requests airplanes. And I think the Russians are viewing this as being part of Ukraine and being part of the war. So unfortunately, there's only warmongers in the media on both sides. I don't see any diplomacy. I don't see any people trying to bring peace here. And this could escalate very quickly into a very nasty situation. And it's unfortunate. If you compare what happened in the months, or maybe let's say 1-2 years before the First World War, you had something similar. I mean, the German press and also the British press have been warmongering nonstop, and you know the consequences out of it. So I think that has to be a serious worry now. I don't like at all to see Germany sending tanks into it. I would love to see somebody trying to figure out peace and diplomacy here. I understand that it's a very complex situation. However, war is never the right answer. Unfortunately, there is only warmongers that basically have the voice in the media. And again, I mean, in a war scenario, you need a lot of commodities to build weapons. Where shall these come from? Of course, somebody has to finance the war, so you can be sure that the central banks and the state will somehow create artificially more money to continue running the war. So it's a very dire situation right now. I personally can't believe we're in the 21st century and are seeing that. You would have thought that mankind is a little bit more wise, but again, there has to be peace negotiations, there has to be diplomacy, and there has to be a way that people sit together on a table and figure out if there's any solution that basically where both parties can keep their faith. Basically, last year was overall a rather deflationary year. But if you look at the balance sheet reduction, I mean, they haven't done a lot, right? They just basically started. I mean, if you would imagine what's going to happen if they really would scale down all these balance sheet expansions that they have done since the financial crisis, I mean, that's incredible. It's impossible to imagine the effects. And so I think what we are seeing right now is similar to what we've seen over the last 15 years. They're trying to move back to normal, but it will not work. Right now, we are still experiencing a lack of these Fed hikes and the tightening, the quantitative tightening. Usually 12 months, around about a year. It will take until it really shows up. You see already mass layoffs by all the big companies. I think that will intensify, and I think by the summer we're going to see more and more the dire consequences of that tightening and rate hiking. And then we will have to see, is there going to be a pivot immediately, or is there maybe they try to wait a little bit longer until really something is breaking in the system, and then it's going back to money printing, quantitative easing, balance sheet expansion, the same thing that we've seen over the last 15 years. I don't think there's any way out of it. The only thing that they've been successful in is buying time and kicking the can down the road, so to speak.
With the US dollar weakening, dollarization occurring across multiple countries, and Federal Reserve balance sheet expansion creating inflationary pressure on global markets, gold prices have seen tremendous growth since the start of the year. According to Grummes, investing in gold may not have been a viable option during World War II due to the gold standard, but this could potentially be different now. Alternatives assets such as art and government bonds are not advisable as they do not assure who will win financially at the end of any conflict situation. Cryptocurrency markets experienced an intense bull run from February 2020 to November 2021 before dropping significantly until November 2022 when investor sentiment was particularly bearish due to news reports on scams and lending platforms issues within the sector. Despite heavy losses, Bitcoin has since rebounded from its 75% decrease to its 15,000 value before recovery in November 2022 onwards. In short, it is important for investors who are concerned about future conflict situations to consider investing in defense stocks while they still have an opportunity. However, it is also important for investors to be aware of the current market and financial circumstances so that they can make an informed decision about their investment strategy. What do you think of Grummes' outlook on the subject matter? You can drop your opinions or questions in the comment section below and also endeavor to give us a like, subscribe, and turn on notifications. Thanks for watching.